Good day. Today we are going to talk about the finite dividends. So, what are finite dividends? So, finite dividends, these are the dividends that are declared to the shareholders at the end of the financial year. Okay, but these dividends, they are not paid out in that financial year. They are only paid out in the next financial year. They are just being declared to the shareholders that these are the shares that are going to be paid to the shareholders, which are finite dividends. But they are not paid out to the shareholders, meaning that now there's an account that is being created because now we are owing the shareholders, right? Obviously, that account, it must be a liability. Why? Because we are now owing the shareholders, right? So what is that account? That account is called shareholders for dividends. So which is a liability because we are owing the shareholders. Okay? It's a liability account, meaning that it increases on the credit and decreases on the credit. On it and decreases on the debit side. Right? And then we're also going to have dividends on ordinary shares, which is an expense. Dividends on ordinary shares. So now, yes, we have not yet paid the shareholders, but you need to remember the matching concept. It is saying that expenses should be recorded in a year that they belong in. So this dividend on ordinary share, let's say it belongs in this year. So obviously we must also create the expense for the dividends on ordinary share. Okay? So it must not be an expense in the next financial year when it is being paid because that expense will not belong in that financial year. Okay? So it means that the way we're going to record this is going to be the dividends on ordinary shares. So the account here is going to be GT, then we are recording. Why are we writing GT? It is because no payment is made here. So if you can check here, no other journal is going to affect this. That is why we're using the general journal. So expense increasing. So with the shareholders for dividend. So this is how we're supposed to record this. This is how we're supposed to record this. Now, what is going to happen is this. What is going to happen is this. In the next financial year, okay, once you are in the next financial year, when the final dividends are being paid in the next financial year, it will mean that now you need to go to the shareholders for dividend liability account and decrease it because now the business is paying. Okay? Because now the business is paying. So now let's say here, this is the next financial year. Okay, I'm saying once you're in the next financial year, and now these finite dividends that you're being owed for the last year are being paid. It means that the shareholders for dividends, which is a liability, it will now decrease. And the decrease were on the debit side. So as we are paying. So this is how we should treat this. Always. So now I'm going to do the examples in the next video.